city gas distribution companies have been in focus, and Mahanagar Gas is one stock that has fallen 25% this year, and major concerns were related to companies' inability to pass on the increase in input costs, and input costs that actually rose due to the depreciating rupee, leading to higher cost of imports and higher feedstock prices. Company also had limited pricing power in the industrial segment. Also, Mahanagar Gas is more of a margin story, and the margins for the company have been very volatile. They have ranged from close to 23 to 38% in last 7 years. And the recent applicability of additional Gujarat VAT just added to the cost woes of the company, and those were the major reasons why we saw this fall in the company. And the biggest hangover for the stock is the promoter BG selling stake. It sold around 12.5% stake last quarter and still holds around 20%. But then company recently took an out-of-turn hikes in first week of June to pass on the impact of increasing costs. This was the second price hike in June after the regular one that the company took in April. This move is expected to improve the margins of the company starting in Q1 FY19 itself, both in the industrial and the commercial segment. Other trigger would be the wins in the recent city gas distribution bids that is organized by Petroleum and Natural Gas Regulatory Body. That will help the company expand its reach in various geographies. Also, there have been talks that natural gas might be brought under GST, which definitely is a positive move for this company, as it will lead to increase in pricing power by around 2 to 14%. Stable gross margins, and also the management of Mahanagar Gas told CNBC TV18 that this will enable them to take input tax credit of various costs. Now let's see what the brokerages are saying about the stock. UBS, that has a sell rating on the stock, as they think that the market is already priced in the higher volume and growth in margins. CLSA is bullish on the company, expects margins to rise from these current levels, especially after the price hikes that the company took in June. HDFC Securities recently upgraded the stock from a neutral to buy. Motilal Oswal also has a buy on the stock, but expects that the EBITDA per SCM will remain under pressure. Now let's talk about the valuations. Currently, the company is trading the cheapest in the CGD space at 15.5 times FY20 EPS, which is at a 25% discount to IGL and 35% discount to Gujarat Gas. And analysts say that this valuation gap could reduce going forth due to the recent price hikes, but that is what the analysts are saying. Before I wrap up, a quick disclaimer: the stock is not a buy recommendation, just few facts that I'm putting forth.